Hey everybody, Stock Picks by Tim here, and I've got Workhorse's consolidated earnings for you, so we're going to get right into it. But if you want to watch the full video, the 45-minute version is down below in the description if you want to watch that. I do cut a bit of the questions out in the Q&A, so we're going to get right into this, and one great thing is they didn't lower their guidance. They actually did meet their revenue, which I was actually surprised. I thought they wouldn't make any revenue. And this one's really interesting because they actually go into another company that I'm very bullish on, and that is ChargePoint or CHPT, and they actually secured an agreement with them. But let's roll this video. Don't forget to like and subscribe. I put out daily videos, and I'm going to be covering CleanSpark, Matterport, Syncytics as well. It's going to be a very busy day, but let's roll that video.
Our first quarter was exactly what we expected it would be. A lot of hard work. We put our heads down, executed on our plans, and accomplished what we set out to do, building a rock-solid foundation based on our stabilized, fix and grow business model. A key element of our progress is continuing to successfully find the right people to strengthen our organization. We further built out our highly experienced leadership team, as well as significantly enhanced our engineering resources and technical expertise. We consolidated and relocated our headquarters in Sharonville, Ohio. The transformation of Union City is tracking to plan. Operationally, we met every milestone on the new product development roadmap we laid out last quarter. We also strengthened our financial position. As a result, we are right on track in executing our revised strategic plan to deliver a family of Class 3 to 6 electric vehicle last mile delivery products, both on the ground and in the air. First, this quarter, we further built out our experienced and talented leadership team. We have hired a new CIO who has more than 30 years of supply chain and IT leadership experience across the automotive industry at both leading OEMs and Tier 1 suppliers. He has also led IT teams in the government sector as well. We have added a new attorney as corporate counsel who brings 5+ years of business and commercial law experience to the team. We also have a search well underway to hire a VP of Sales and Marketing with significant commercial vehicle and transportation industry experience. Operationally, we have hired a Director of Quality with more than 35 years of quality systems experience at large OEMs, including in powertrain and final vehicle assembly and supplier quality development. Lastly, we have hired a Director of Production Control Logistics who has 20+ years of supply chain and lean systems experience at major Tier 1 automotive suppliers. Additionally, we have rounded out our principal engineering ranks. We call them subject matter experts, and now have them in place for chassis, electronics, controls, and body design work. We look forward to benefit from each of their unique perspectives and insights as we execute on our product roadmap. Last quarter, we opened our new Vehicle Design and Testing Technical Center in Wkhs, Michigan, to expand and enhance our design, engineering, and testing capabilities. This center has been a very fruitful investment for Workhorse. We have greatly expanded the breadth and depth of our engineering talent, which has already begun to enhance our designs, and we still have in the budget 15 open personal requisitions for engineers. Test equipment will be installed in Wkhs by fourth quarter this year, bringing the site to a fully functional level by the end of the year. We continue to make significant progress in transforming and expanding our Union City, Indiana plant into a world-class manufacturing complex. As you can see on slide 8 in the image in the middle of the left-hand side of the slide, the manufacturing plant is relit, repairs and rehabilitation are on track and near completion. The end-of-line dynamometer is expected to be installed, and the facility will be 100% ready for production in Q3 of 2022. We are often asked how we can get to volume production with only a $15 to $20 million range investment levels we have been discussing. The short answer is because we did not start with a blank piece of paper. We already have a well-built plant coupled with a rich history of manufacturing. We also reached an agreement in the quarter to take over 2 additional factories on our property, further expanding our manufacturing floor space and footprint. As an indication of how important these types of assets and capability are in the EV space, we have been approached by several firms to possibly undertake contract manufacturing for them at our Workhorse ranch as early as this fall and in next year. We will carefully evaluate these opportunities and will update you when there's more information to share. As I mentioned on our call in March, we look forward to hosting many of you at our Investor and Analyst Day event in Union City in the fourth quarter, so you can see firsthand what we are now calling the Workhorse Ranch, and also get a chance to drive our new generation of electric vans and trucks. We are also pleased that we completed the consolidation and relocation of our headquarters together with our advanced technology team in a new facility in Sharonville, Ohio. We are already realizing improved efficiencies and teamwork across the organization. The new prototype shop at that location is under construction, and we expect occupancy to begin in Q3 of this year. Finally, we're in the process of relocating our Aerospace team into a larger space in Mason, Ohio, where we plan to start production in 2023. We accomplished exactly what we set out to do during the first quarter. As we previously communicated, our new product portfolio roadmap includes getting existing C1000s repaired and back on the road before building out and retiring them out. In parallel, we are focusing our engineering team's efforts on developing 2 new truck chassis platforms in 22 to 24, while also partnering with GreenPower on a 3rd vehicle to bridge the product gap created by the decision to limit future C1000 production. I would also like to highlight that we have recently signed a referral agreement with ChargePoint to support our customers on their electrification journey as they transition to electric last mile delivery vehicles. This partnership connects Workhorse customers with North America's largest charging network. Turning to slide 10, let me walk you through the current status of our major product platforms. Last quarter, we completed FMVSS testing for the C1000 and noted that several corrective actions were required to complete the full vehicle certification. We also fully tested the e-powertrain reliability, structural durability, and the payload capacity of the C1000 and identified several necessary corrective actions required to provide a safe, reliable vehicle to our customers. During the first quarter, we executed on these corrective actions, and all FMVSS changes have been finalized and released by our engineering team. Front suspension design and vehicle bill of materials releases are now complete. Even with a bit of supply chain exposure in Shanghai, we are on track to return vehicles to service starting in August of this year and repair all 161 currently manufactured vehicles by year-end. We plan to manufacture 50 to 75 additional C1000s by the end of the year from inventory currently on hand. We are working closely with a few customers to sell 100% of the vehicles in 2022. Of course, we will provide service and repair parts support after we retire the model later this year. Turning to the future and the W750 and W4CC, which will serve to bridge the gap between the C1000 product and future production of the W56 and W34 platforms. Workhorse and GreenPower have finalized several enhancements to the base vehicle, and production of the first units is already scheduled. I believe our strategy to fill supply chain early for these vehicles is paying off for us. We plan on taking delivery of up to 1,500 chassis from GreenPower, completing the manufacturing process and delivering both cab chassis, the W4CC, and finished step vans, the W750, to customers in the United States and Canada, beginning as early as the 3rd quarter of 2022 and throughout 2023. We are currently here in California at the ACT Expo in Long Beach, where the Workhorse team is introducing the W750 step van and providing ride and drives with a fully loaded 5,000-pound W4 cab chassis vehicle. It will be the first time since our March 1st announcement that we will have demo vehicles for customers to ride in and review. We are already excited to have our first purchase orders for this vehicle family, all of which have successfully achieved California HVIP approval. We expect to realize further sales activities now that customers can see, drive, and fully review the vehicle. If you happen to be out here at the show, please stop by the booth and take a look or take a ride. We look forward to continuing to collaborate with GreenPower and delivering the first trucks from our Union City plant later this year. Turning to the W56, which we introduced last quarter as the first new Workhorse fully designed chassis platform. The W56 will serve the Class 5 and 66 delivery step van and truck market segments, and it builds on Workhorse's experience building chassis systems for these classes of vehicles. The W56 has our shortest path to a homegrown design, tested, and economically viable BEV platform. It will come in 3 wheelbase sizes, addressing a TAM we estimate to be approximately $1.7 billion per year. We continue to meet all timing requirements and milestones from the beginning of production for the vehicles in Q3 of 2023. Designing, testing, and producing the W56 is the #1 program priority here at Workhorse. I manage those program reviews myself on a monthly basis. We look forward to continuing to update you on our progress on this critical program every quarter. Now turning to the W34, which, as we mentioned in our last call, is a new Class 3 and 4 chassis that builds on the key technologies introduced by the E-Gen and the C1000 vehicle designs. This vehicle will feature accessible low-floor platform with improved ride and handling, efficient lightweight systems, and advanced driver technology. We estimate the addressable TAM for this segment of the commercial vehicle industry to be about $10.4 billion per year. We continue to expect the beginning of production in 2024, which means we'll benefit from industry tailwinds as new mileage standards and emission standards take effect for commercial trucks in several regions of the country. The bottom line is that we have kept all the programs on time and on budget while adding skilled staff to ensure we continue to hit our aggressive milestones. Last quarter, we announced that the Federal Aviation Administration provided us with approval to pursue type certification for the Horsefly TM delivery drone in 2022-23. We continue to fly under Part 107 certification. We are in the final development and testing phase for our vehicle launch drones with industry-leading payload, range, and safe delivery capabilities. Building on the success we had last quarter, obtaining several grants from the U.S. Department of Agriculture, we are also pursuing additional contracts and grants with the USDA to provide monitoring, data procurement, and analytics as part of its demonstration projects. Through a dedicated development effort, we also designed a market-leading package delivery winch and are continuing extensive field testing. We are currently flying in North Dakota and Mississippi to support government programs. On the staffing front, we continue to add engineers and pilots to the team to ensure we can deliver for our customers. We're excited about the potential for market expansion we are experiencing in our drone operations and are exploring additional projects with both federal and state governments as well as larger retailers.
Our results illustrate the progress our team continues to make to strengthen our financial position and drive greater operating efficiencies, which will allow us to execute our product portfolio plans to deliver value for customers and shareholders. Net loss was $22 million compared to a net loss of $120 million the same period last year. Loss from operations in the first quarter was $19 million compared to $16 million the same period last year. As of March 31st, 2022, the company had approximately $160 million in cash and cash equivalents. On April 6, 2022, the company entered into an agreement with High Trail Capital to exchange their outstanding 4% senior secured convertible notes for approximately $29.7 million of the company's common stock. This transaction eliminates the remaining debt from Workhorse's balance sheet, and we're really excited about what we've accomplished on this front. Strengthening our financial position has been a key priority.
We intend to complete the critical executive level staffing here at Workhorse, focus on commercial, engineering, supply chain, and IT systems, following the significant hires we made over the past 9 months. We will execute on our product roadmap timelines. We will continue the expansion and the renovations at the Workhorse Ranch in order to launch products in Q3 of this year. The team will begin to both acquire, transfer, and install test and validation equipment at both Michigan and Ohio technical centers. We also expect to complete the first phase of common system deployment in terms of production, lean systems, ERP, and HRM systems. And finally, we expect to secure customer order commitments for our new products, W750, W4C, and the limited number of C1000 vans we expect to repair and build this year. We are doing exactly what we said we would do to build a rock-solid foundation for the company, and that always starts with people and a strong balance sheet. We have hired experienced, capable executives from critical positions, strengthening our operational, supply chain, and technical capabilities, and we solidified our financial position by removing all debt from our balance sheet. Second, our strategic product roadmap plan is on track, and we made important progress during the quarter. We will be the pioneers in the transition to zero-emission commercial vehicles, targeting specific classes of vehicles in the last-mile delivery segment. And third, based on direct feedback, we remain confident in the opportunities ahead to deliver electric vehicles to our customers that they want, and in turn will deliver long-term shareholder value.
Now, I did want to highlight this portion of the Q&A. Let's roll it.
Last one I had was just on the competitive front. You mentioned that, with the C1000, the Class 3, that you're early, but there's a lot of new entrants that you see on the show floor at ACT last night that, are much better capitalized than you folks. And so there's certainly a lot of people coming in 23 and 24. And so I'm just curious, how you view the competitive front as you ramp up.
Yeah, I've been here now just a little over 9 months. I got to go to my first ACT show last year. And when I left that show last year, my thoughts were half the companies here are not real companies. They don't know what it means to build a factory. They don't know what it means to source parts, test and design vehicles. And I did a quick walk through the show last year. There's some potential real strong players here who have deep pockets or big sponsors. They're going to emerge. They're competing in a lower space than we are now. They may come into our space down the road, but they still have their hands full launching their Class 3 vehicles or Class 2 vehicles. There's still several companies out here who are in what I'll call the conversion mode, where they're 100% reliant on outside people for chassis. And as you know, in the industry now, chassis supply is constrained as the big OEMs are using their valuable parts for more profitable vehicles, I'll say. So I feel very comfortable that if we execute on our plans, and I'm confident we have the team now to do so, that we can be still first to market in our segment, and we'll see how the chips lay, all right? Talking about building a factory or building multiple factories in a short period versus actually having a factory and retrofitting is a huge differentiator for us here at Workhorse. In my career, I've probably built 12 or 14 plants. It doesn't happen in 6 months. When you don't build 5 or 6 plants in 18 months, you got to build plants. It takes us minimally here in North America 18 to 24 months to buy the land, put the infrastructure in, and oh, by the way, you have to hire the people. One of our competitors I know has a beautiful factory. They only have 8 hourly people in that factory right now. How the hell are they going to launch in the fourth quarter of this year? You tell me.
So, Rick, the progress since we met last ACT Expo has really been impressive. And I would say the capital structure is the one thing that I would call out as the most visible progress that you've made so far. So I just want to commend the progress of the company. So, you know, as you talked to people yesterday, the first day of the show, was there anything new that you were hearing from your customers? Anything people were saying specifically about the vehicle on the floor? You know, what can you share with us to help us with visibility on customer uptake?
Good question. I was on the floor last night for only an hour and a half, 2 hours. One of the largest last mile delivery guys came by, went all over our vehicle, said this is exactly what we need. Can you also build a larger version? So the version we had on the floor today was 750. That customer said he definitely needs 1,000 cubic feet and up to 1,200. That's absolutely in our product roadmap for the W56. The big issue I think we heard right now is there's a strong demand, stronger than we expected when we started this journey for the cab chassis version. There are people in this industry, as you know, in the commercial vehicle, there's a lot of upfitters. While we were originally focused on last mile delivery, it looks like we can sell some electrified cab chassis vehicles that can then go to upfitters and they can put, whether they want to put a reefer on it or a box or a flatbed. And I think we're learning as we've come into this industry and just how complex the upfitting portion of the business is. Okay, that's one. Two, I think one thing that's common from last year to this year is the infrastructure has to be in place. And we saw the infrastructure bill that came out last year was about, $15 billion towards infrastructure, both for EV vehicles and also for buses. So we hope to participate in some of that. And recently we've seen some of the initiatives by the Department of Energy to put forward investments in low-cost loans for battery manufacturers here in North America. So I think the two risks for the industry are infrastructure and battery supply. I don't think battery costs are coming down as fast as people projected. I had one customer ask me why I can't get to $100 a kilowatt hours, and I offered him, I said, you go buy the batteries for me, and I'll give you $100 kilowatt hour batteries. And he couldn't do that right now. Only Tesla can do that right now because they're building 1,000,002 vehicles. So those are the two big linchpins I see. But the tailwinds, based on everything we see, the demand by investors for ESG type companies, and the commitments by some of the largest fleets in the world, especially here in North America, to be carbon neutral by 2035 or 2040 are real. And so that means we got to be able to have the right vehicles, and then we have to have the right infrastructure to do it. That's part of our reason to go work with ChargePoint. I got to go out there and tour their facilities out in California earlier in the quarter. Very impressive, good array of not just hardware, but software as well. And so fleets have to figure out how to make this transition too.